Dear guests, welcome back to our playground of innovation. For this second round, we're excited to delve into a topic that's set to position your startup for long-term success. Let's explore the key steps and strategies for successfully securing VC funding and offering insights into how to approach investors and structure deals. If we could welcome on stage Sophia Moulin, founder and CEO at Epicon Capital Club, who is moderating the panel, The New Economy, the Heartbeat is in the Metaverse Hunting for Investors, Where to Find Your Funding Champions. Sophia, the stage is yours.
Thank you so much. Hello, everyone. To introduce myself, my name is Sophia Moulin. I'm the founder and CEO of Epicon Capital Club. It's a business community for the family businesses, family offices, and we invite startups, funds, and projects globally to set up business in the country, and we make partnerships and investments. Very happy to be here today with three amazing speakers. I would like to start by asking to introduce yourselves, please.
Hello. Hello, everyone. My name is Osama Shawky, and I'm 23 years in the UAE, doing lots of startups, 3 exits, 3 failures, name it. So I am currently the CEO of a company called Stay, which we do similar to Booking.com, but for long-term stays.
Thank you. So hope everyone's waking up after lunch. My name's Grant. I'm the founder of a business called Mingzulu, which is an advisory firm based here in Dubai. I'm a former banker. I've been in the region now about 11 years. I've worked in the management consulting world for a decade or so before that, where I was an EY partner and in the UK, working with a lot of technology, disruptive tech companies over the last couple decades. And in this region, we're very focused on working with predominantly growth stage founders who are getting to the stage where they're looking to expand in region, internationally, as well as large established enterprise businesses. But we do a number of projects where we work quite closely with earlier stage founders where we're particularly passionate about what they're doing. So we have a collective of quite senior people who are all in industry. Some are investors, some are high net worth individuals. A number of them are board members of various different organizations. A lot of it's in tech, as well as the financial services sector. So looking forward to feeding into this. There's a lot of interesting advice we can probably give.
Hello, everyone. I'm Ramzy. I am a senior analyst at Global Ventures, which is a UAE-based VC firm. We have teams that sort of alternate between Saudi Arabia, Egypt, as well as Nigeria. So predominantly our investment thesis is focused on the MEA region. I know the name is Global Ventures, but the whole idea is to back founders that are building from here with the potential to go global. We're sector agnostic, so we like to take a look at everything. But I'd say in terms of our portfolio, it's mainly focused on fintech and digital health. And for our third fund, we're deploying out of a $200 million fund, mainly focused on supply chain. My background is in mechanical engineering, so landing in VC was a great transition for me, just given that I've always loved to be part of the techie side of things, but at the same time, make some money.
Amazing. So the focus on this panel is about how to find your next investor. The startups, they have built a team, they have built an amazing product, they are ready to go in the market, and now they are swimming with the sharks. I would like to find the next investor. I would like to start with Osama. Could you please tell us, for entrepreneurs raising capital for the first time, what advice would you offer on getting started? Are there any particular steps that can make a big difference in their funding journey?
Okay, so raising fund. Raising fund has a 30% luck and has a 70% of being stubborn. So treat the fundraising as you treat sales funnel. And always remember, it's much better if all the founders can pitch, so you can cover bigger areas and faster in time.
Grant, what are the key trends that you are seeing in the investor community right now, and how can businesses position themselves to align with these shifts?
Okay, so big picture, macro level, I think if you look at this region in particular, there's probably a number of kind of driving factors that are kind of pushing investor interest. So we've got economic expansion. So UAE in particular, the Saudi market, broader GCC, major investment coming in across a number of different sectors around diversification, right? So if businesses that are being founder-led are focused in some of those strategic priorities at a country level, you're obviously going to be getting potentially a lot of interest and support from the investment community. So very high level. I think the second one is the outlook for the GCC economy. Projection for 2025 from a number of the economic analysts is 5%, which is significantly more growth than we're seeing in other mature markets like Europe and Asia's in very, obviously very large space. US as well, we're very dependent on how Trump lands. So this region's growing, and we're seeing a lot of activity from the investment community who are looking at global ventures being a good example, companies that are international in outlook that are maybe founded in this region. So focus on these sorts of areas that you can service this market where there's actually access to capital and liquidity. I think the second big factor around trends is we're seeing huge investment in technology, and technology across all sectors. So technology enabled, be it fintech or be it in the AI space that's supporting multiple industries, be it around providing infrastructure to support growth. The adoption of cloud and AI in all sectors is of a massive priority, and we've seen a huge wave of investment at a government level. So look at the announcements from Saudi Arabia, $100 billion invested in AI and investment in AI tech and companies. UAE, G42, Abu Dhabi government, now Dubai. Dubai, the first government to announce a minister for AI to embed the whole kind of revolution of AI in government, but also in the ecosystem. So again, businesses that are building propositions that are focused in these areas are going to get a lot of interest and attraction. And I think the last one would be real traditional infrastructure projects are getting a lot of attention. Now, if anyone lives in Dubai, you've seen the growth of the house prices and the rental prices, but actually being able to service that growth. So prop tech, as an example, a lot of focus around fintechs and startup companies coming into that area. And that's also going to be very, very active in the likes of Saudi Arabia. So businesses that are building propositions to support that, where there's a captive market and a growth economy, are going to be getting more interest. So this is a start for 10 at a high level. And I think we'll drill into some of these a bit more as well.
Amazing. And Ramzy, how should entrepreneurs approach negotiations on equity without compromising their control? What are some strategies to ensure a win-win partnership with investors?
Amazing. So I think as a VC, we want to be more than just a capital partner. I know different VCs will always preach this, but you really have to sort of understand what you want from your VC. Whether that's an introduction to the LPs, which are more international, whether you're focused on regional partnerships with government affiliations. I think it's super important before you consider a VC or choose a VC, it's important to get on the website and look at the team, look at their experience, see if there's a fit, check the portfolio. For example, a lot of the time we have a 60 company portfolio now. We like to make introductions to help these companies grow. So I think fostering an ecosystem for founders to collaborate with each other has a lot of merit. Now, I understand that funding with VCs is particularly challenging in the earlier stages. There is, I'd say there is more capital available with angel investors. However, it's important to really take care of your cap table. So one thing that we see in terms of Series A and Series B investors is super messy cap tables, and that makes it very hard for founders, or founders essentially become too diluted, and they lose a lot of control in their business. So I think before you go into negotiation, it's important to do your homework on your valuation, how much you think your company is valued at. Don't just leave it for the investor to price. Feel free to push back and challenge what figures investors come up with.
I like that. Challenge the investors. Back to Osama. What are the most common struggles the founders experience in their fundraising process? Can you share any memorable pitches or strategies that stood out and led to funding success?
The struggles are too many. So as long as you go to VCs, for example, it's you have to have a quite ready cap table, as Ramzy said. Try to only have only the founders for the first round, even if you are raise and safe. Struggles. You get a lot of rejections, lots of rejections, and you have to be stubborn. You have to be strong. You have to keep going, and don't leave one rejection without asking for the reasons. Always take the reasons seriously, because most of the founders, they just ignore it. And one of the best things is this subject exactly. So we got rejected by one VC, no need to mention the name. And then I replied to him, but you didn't meet me yet. How do you know that you are investing in founders and you just saw the pitch deck and you refused us? So why you don't give us a chance? And we went through all the process for 3 months, and then we actually got the fund from them.
This is challenging investors. Keep it up.
Yeah. Can I add to that as well?
Absolutely, yes.
So I think, so we're working with a lot of founders at different stages, a few smaller early stage, but some going into the more scale-up growth stage. And a lot of it's down to, when you're engaging with investors, it's about actually, you've done some really solid work around the preparation, so you touched on this. So you're actually going to investors that are really thinking about your particular sweet spot in terms of what you're building. And I think doing that research is really important, but also spending time, like this environment in the UAE is brilliant there's a lot of ecosystems that are set up that are free to engage in. So I'm on the advisory council for a group called FinTech Tuesdays. There's about 6,000 people part of that community now in the UAE. And in that community are founders, bankers, regulators, and investors. And they're all joining meetups and engaging. So meet some of these people in a social environment, build some relationships, get your brand out there a little bit. But actually, some of that softer stuff really does play out. So I think for founders, engaging and building your network is really important, because it equips you for those failures, but it also stops you going to places that you know you're wasting time.
Absolutely. So the next question for Grant is, are there any particular industries or business models currently capturing the investors' attention? And what makes them so appealing?
Yeah, so look, we've got some projects just now where we're advising some international inbound companies who are looking for capital from this region, but they've got a global remit. Some are regional companies. And I think it's like the gold rush hundreds of years ago, especially in the US, where picks and shovels were sold out because that infrastructure was needed to obviously mine. It's the same now in this economy. So provision of some of the infrastructure, network capability for cloud, data centers, compute capability to actually do all this AI work. Now that organizations at scale are finding out how to actually leverage AI, the consultants have given them all their PowerPoint decks and strategies. They're now actually looking to put real life use cases into action, and there's not the infrastructure in place to supply all the demand. And that's a massive area. So that's one key area. I think the real estate boom that's happening in the UAE in particular and Saudi Arabia is an area where if you're building propositions that service that ecosystem, really important. And again, back to traditional services, there's huge demand on certainly broad skills around professional services, but the legal profession's having to evolve. If you can provide enhancements to some of these traditional consulting businesses around the use of technology and new ways of doing new business models, you're going to benefit, right? So I think, again, traditional services like that. The green economy, with COP here a couple of years ago, diversification in Saudi Arabia and GCC countries away from oil-generated income. There's a lot of focus on green tech and green renewable energy capability and projects. So these are probably a sample of initiatives that I think if you're building propositions and businesses that support these types of propositions in the market and sectors, you're going to see demand, which will then support investors coming behind you to allow you to kind of move faster and get capital into your business.
Absolutely right. And Ramzy, what investment trends should founders be aware of for this current year? Are there any specific sectors like AI or sustainability that investors are prioritizing?
Absolutely. So I think from a high-level perspective, if we look at the regional funding for this year for VCs, funding has declined slightly in line with the rest of the world trends. However, there is relative resilience in this part of the world, actually. I'd say there is still liquidity, and liquidity is being deployed into the market. But what's interesting is that the number of deals has it's had a minor uptick, actually. So what that kind of indicates is that from a seed to early stage deals are still going through, but there seems to be a gap between Series A, Series B, and growth stage companies. In terms of the sectors, I think fintech is still king in this part of the world. I think there are still a lot of fundamental challenges that haven't been solved, primarily around SME lending, alternative credit scoring. We're seeing a lot of those sort of models. And I think there are substantial tailwinds where startups are now leveraging. So you have, especially in Africa and in the Middle East, there's a lot of smartphone penetration, internet penetration. A lot of the fintechs, building out one core feature, whether that's FX transfers, virtual cards, and then having that as your anchor product, and then building out a more consolidated suite. We're seeing traditional banks that have been unchallenged for so many years now. They're being challenged, particularly amongst the youth, which represents a sizable population of the MEA region. And in terms of the AI, it just feels like it's moving 100,000 miles per hour, and it's even for us as investors, it's very challenging to know what to invest in. But I love your analogy on the pick and act metaphor. It's great. I think we're really looking at the true infrastructure plays, whether that's the data sourcing, the data parsing. There are regional nuances here that are extremely compelling. For example, in Africa, there's over 1,000 spoken languages but are not written. Think about how many people can't communicate with AI. We've seen all sorts of novel ways in terms of capturing that data. So I'd say AI for the region, there's a very strong and compelling case for it, as well as fintech.
Just another add to this on the AI topic. So it's like the buzzword everyone's talking about, but what's the real use cases for it? Across all sectors, it's eliminating human intervention, which there's a benefit of that is if you can relay people into more focused roles that are maybe relationship and strategic to the company that actually a software bot could do, then you're going to see kind of cost savings and potentially better results and faster turnaround. So a family office, back to Sophia, your heartland, we're working with a family office just now who are very, very focused in the deep tech space. So they're investing in deep tech companies, they really understand it. And they decided they had 9 analysts in their department doing all kinds of different project work from the financial side through to evaluating various different investment portfolios or supporting business as usual. They now have 1 human analyst. Bots are doing all the work of the previous 8 that are now still in the business but are focused in other areas. And that's just one example of, in the investment world, they're actually using technology to get faster decision making and do things, but actually save some cost. And that's going to be very disruptive to all businesses. So it's quite interesting to see that actually happening now.
Yeah, actually today we integrated AI call center in our business cloud, which is like a real human voice in 36 languages. We don't have all the African dialects yet. I would like to go back to Osama. You are one of the most experienced founders, 6-time founder, multiple exits. From your experience, what advice would you have to give to the first-time founders starting now?
This is a big one. So if you're going to raise fund, study your market very well. If you're going to raise fund, be sure to reduce your budget to the minimum. If you are going to raise fund, make a pitch deck that actually present your company. If you cannot present your company, no one else will be. And if you think raising fund is simple, then it's not your game. And remember very well, if you are raising fund, it will take a long time with you. So you have to plan all of your runway and all of the budget running the company. So think about all of this before even you start.
True. Raising capital is not simple, but it's fun, I would say. Even getting rejected, well, when you say, I just got rejected 10 times, why would this be fun? You learn from this. Back to Grant. What are some common pitfalls the businesses should avoid when seeking funding, and how can they address this challenging early on?
So, distill it down, I think there's three key things. The first is it's a simple one, but have a proper business case, business strategy it's fueled by primary research. So you know your target segment, you know your customer, and you've done a lot of research in terms of how you're going to serve them, and be able to evidence that when you're engaging with the investment community. So you're demonstrating that you've actually engaged with the market that you're going to serve. And there's so many businesses conceptually think they've got something, or they're following a wave of other investors or other founders launching the next big buzzword business, but they've not done that real kind of differential research in terms of how that business that they're building is going to be different from the others and how consumers are going to embrace it. I think the second one, which Ramzy, you've touched on, is know your numbers. And if you're not if you're the founder of a business and you're not the financial wizard, have someone as part of your team who's very strong in that space, or get some support. So, because when you sit down with an investor and they don't understand clearly how they're going to get return from money they put in and when, and if you're not revenue generating, you're very early stage, you're going to have to convince them that you understand enough about, back to the first point, your strategy and consumer segment, that you know that when you get the initial investment and build your product and move through the various different stages of life cycle, that you are going to be revenue and profit generating. There's no point in engaging with an investor. They're not going to invest in you as an altruistic project, right? So that's number two. And I think thirdly, be very smart with the investors you engage with. So if you need a lot of support from the investment community, i.e. you're fairly early stage, this is the first first business you've founded, you want investors who are going to give you more than just money, that you want their network, you want some guidance, you want access to their experience over, in some cases, decades, right? Whereas if you're a more mature entrepreneur, and this is maybe a fifth business you've built, you know the pitfalls of running a business and getting it set up. So you might just want access to the right money at the right price. And also knowing that investor ecosystem, so from angel through to the VC funds, through to the family office network, or if you're in the scale side, like we've got businesses we work with, they don't want people coming in and taking cap table equity investment away from them. They want access to debt. So they have already invested significant amount of money. They don't want to get diluted in terms of what they're doing. They may be pushing for an IPO in the next few years. So they want people who are going to lend them money from a debt capital perspective to support their growth. Maybe it's for a large consignment of infrastructure they need. And they know that the profit they'll generate once they've got that in place will pay back maybe a higher interest rate they need to pay. So be quite savvy around the types of investors you're engaging for the types of support you need. And that's a much bigger conversation. I think there's a whole kind of learning around those different groupings to engage. So VC is not the only path, I think, is the short answer.
For sure. And Ramzy, for those entrepreneurs raising capital for the first time, what advice would you offer on getting started? And are there any particular steps that can make a big difference in their funding journey?
Yeah, so I think we're in the digital age, and things have shifted a little bit in terms of you have a lot of online meetings now on Zoom. The human attention span has substantially shrunk. So I think there are so many non-verbal cues that make a huge difference. When I'm, for example, in my day, I speak to 6 or 7 companies. So there really is an emphasis on a deck or a storytelling narrative that captures my attention super quick. So I think having an easy to read deck where where the key information such as the market sizing, the problem is clearly communicated with the investor is a super valuable tool for founders. And I think it also differs in terms of the different stages. You want to have different narratives. So when you're in early stage, it's about communicating the size of the problem. I think that's where you should focus or emphasize the most. If you're a mid-stage to growth stage company, you really want to emphasize the traction. And so the deck, super important. And even try to be different. If you're located in the same city, similar to what you were saying, Grant, meet up with the investors, encourage them to have an in-person meeting. One of the biggest decisions that influences whether we invest in a founder is coachability. That's not something that you learn about a founder through a 30-minute call. So schedule a follow-up call, ask for more time. And the second piece of advice I would give is also really build a relationship with the person in front of you. So just because it's a no at one point in time, it doesn't mean it's a no forever. I think one of the things that we value the most in terms of, we say founder coachability, but what is a coachable founder? A coachable founder is a founder that sets targets and actually meets those targets. And so building out that relationship with an analyst, a partner, where they champion you at the IC and have you in the back of their mind, initiate the conversation a lot of the time, I think is a super important thing that you should do.
Yes, absolutely right. And we are in the Middle East, so people here invest in and do business with people they know, they like, they trust. So building relationships is the number one. I would like to know who is in the audience today. How many startup founders do we have? Wow, that's quite a lot. How many first-time startup founders do we have? Okay, we would like to know from your experience, what questions would you like to ask?
Hello. Good
I can
afternoon.
hear you.
Good afternoon. My name is Tigran. I am the founder, managing director of Magnus Investors. Based on Mr. Grant, based on your experience in banking, wealth, and asset management, I would like to address this question to you. My firm, an investment management firm, is registered in Australia. Our clients and investors are mainly from Australia, and some of them are from the United States. However, it's growing a bit slowly. Therefore, I've decided to acquire a license from this region, from ADGM, to get a financial investment management license. My question to you would be this. Based on your experience, and first of all, I have great respect for your experience and extensive knowledge in this field. I would like to ask you, how can investment management firms like mine, small investment management firms, let's say the ones that have assets under management less than 5 million, even less than $1-2 million, how can they collaborate effectively with other fintech players to create mutually beneficial opportunities? And how can the founders or managers, investment firms, to build trust and connect with high net worth individuals, in the meanwhile attracting investments from them? Thank you very much.
So I think the first thing you're doing is you're not flying in, trying to find money and fly out. So that's a good thing, because those days are over. So this applies to the big global asset managers who are coming in, sort of sourcing capital for funds, right? They're all coming to the region now because regulation's getting much more robust. There's ecosystem of innovation. It's geopolitically stable. Like UAE is like the Switzerland of the world now. It's able to operate with multiple geographies, right? I worked with one organization a few years ago. They had 70 nationalities working in their office here in Dubai. So you're dealing in a very global, multinational environment. So being here, investing, getting a license here is big tick in the box. because you're showing commitment to the region. I think the second thing is building your kind of, it's the reason a group of us founded FinTech Tuesdays is we wanted to build a grassroots community that wasn't sponsored, wasn't driven by large corporates, but brought just this, for this exact question, brought people together in a social way, right? And there's all kinds of social channels from WhatsApp to meetup events. Go along to these things and you'll meet founders of businesses, you'll meet investors, you'll meet bankers, you'll meet regulators in that environment. Spend time with them. Just share what you're doing and people will give you advice. They will give it for free. You don't have to pay for it because they've been through that particular issue. And that's why we wanted to do it, because everyone needs knowledge and advice, and learning from people who've been through the difficult times is a great outcome. And I think the last thing is, I think you've got to build your brand. And building your brand again as a company, as a founder, is you need to get involved in these sorts of events. You should be sitting up in these chairs, right, sharing knowledge with people. And if you're bringing experience from another market that this market can benefit from, that's one of the first things you can do. And these are all for free, right? Apart from the license you've paid for and your company set up, obviously. So I just do more of that as a start of a 10.
Osama or Ramzy, would you like to add something? I think we ran out of time. But thank you so much, everyone. It was really nice.
I think we just have one more question. We do have time for one more question.
Oh, awesome.
Okay.
Hi, everyone. Firstly, it's so great to see a woman on the panel, and I think my name is Rosa. I'm the founder of Anka, a holistic wellness app. We're pretty much a B2B2C, where we connect healers, coaches to people seeking them directly. And one of the challenges I've had as a founder in Dubai, being here for 11 years, is raising funds as a woman. I find it's so much easier for my male friends to be able to raise, and we know the statistics around that. However, how do you feel about the UAE really pushing for women to be advisors and really pushing for investment funds coming out to women and really increasing the 2% rate to a higher rate for funding? How do each of you gentlemen contribute to this ecosystem in supporting women in tech or startups? Thank you.
I think we should ask the VC first.
So actually, the female founders in the ecosystem is something that we really do track, and we actively try to make an effort to sort of directly outreach to the female founders. But I think, so Global Ventures has another arm, which we recently merged with C3, which is a social impact accelerator. And they launched sort of programs for women, and they recently launched the Women in Tech Accelerator. Happy to put you in touch with our coordinators. So there are, I think, initiatives for the region to support women in tech and women raising.
And I think internationally, there's obviously, like Pact VC we work with, the founders are all female, right? There's a number of large global funds based out of Europe that are looking at this region now, have female-focused founder funds alone. They will only invest in female-led businesses to support the diversification agenda. This region's starting to do more of it. And I think also I'm certainly working with a number of female founder-led businesses in Saudi Arabia. So you should connect with people like Naseba Al-Raji, who leads Forest Invest. So I'll chat to you afterwards. And she's a champion in Saudi Arabia of that movement of building out more businesses and getting more support from the investment community as well. So it's not as advanced in maybe US and Europe and the likes of some of the Asia markets, but it's definitely getting a lot more momentum.
One more thing. So females in Arab country are always easier to raise funds more than the men. That's for sure. And let me introduce you to one of our community that has almost 10,000 startups inside around the globe. And one of the biggest initiatives that we do for every 3 to 4 weeks is actually female empowerment. So we try to get them into the stage. We teach them how to pitch and how to raise. We give them one-to-one mentorship, trying to help as well in the community. In Arab country, this is the easiest fundraising.
Thank you so much, all. I think that's it for this panel. Thank you very much, everyone.